Good day, fellow investors. Is PayPal value or a value trap? Every day I get a few comments. Sven, you should analyze PayPal. What do you think about PayPal? Even if the business doesn't continue to grow with the buybacks, its value. Have you looked at PayPal recently? And then also my old viewers, I'm pretty sure you mentioned that you will never make a video of PayPal, but okay, I can perhaps help some of you in giving you my perspective now. But things have changed and I have now taken quite a large position in PayPal, just saying. PayPal is still growing, 10% good buybacks. So let's see whether it is value. Now, I did a video on PayPal 3 years ago when the stock price was 126 as shown below. I told you risk, competition, deceleration, not for me, especially after the pandemic exuberance and everybody at home buying on PayPal. Then I made other two videos when it was at 60, still saying how the Desperation, tokenization, crypto, buybacks, things like that, and I'm again not buying PayPal. Then everybody was destroying me in the comments saying how stupid am I, especially when the stock jumped 50%, it went from 60 to 90 I think, but we are now almost back to those lows. And then I just made a clickbait title and you can see that the views are almost double the not clickbait title. I put this again at the current situation because yes, it can 3x, but there is also risk. Let's discuss those risks. I hope if you're an investor this happens, and if you look at the numbers, yes, it's clear pure value. I look at the free cash flow, 6 billion, they are using all that money, 6 billion to buy back stocks, 1 billion just capex, earnings per share, 7 to 10% growth. This looks stellar from a value investing perspective. The P ratio is 13. If just adjusts to market valuation, that's just a 2x quickly, even more than the 52% return. However, when you spend money on buybacks, that assumes, of course, as a manager, you have to assume that. But as an owner shareholder, you might not want to let your management doing that. You assume that the business will last forever, that there is no risk and that cash flows will keep on growing forever. Because if you buy back your stock, then that's the assumption. But what if the management is not doing that because the stock is going to be valuable forever, but because they're just compensating themselves to try to make as much money as possible as long as it goes? Because yes, they are shaping the future of e-commerce, even if I think we use them less and less. And if I ask OpenAI what's their business transaction revenues, other value-added services that they are trying to build, but the environment is extremely competitive, which means perhaps hopefully also for my research platform these take rates will keep on going lower. And yes, they still have a massive user base, but let me know in the comments how much you are using it. They are growing with all their things, but is that just short-term growth, the Venmos, the things like that, trying to make things cooler with the PayPal stable coin, another, for me, sign of desperation, and then they say this 300 trillion minting glitch was good because it was good marketing. Okay, nothing happened there, but it shows how they are going into the tokenization stable coins that Ken Griffin in this BlackRock video said it's all for shysters to hose the American retail investor. And that's the risk also with PayPal. Are they hosing you with those buybacks or creating real value? Because they have great cash flows, the opportunity is there for growth, the competition is the key risk. But let's look a little bit deeper at those incentives. Because when I see stock-based compensation, what's this? 1 billion, it will likely be 1 billion, a little bit lower than 2024, but that's huge stock-based compensation. And they might be just spending 6 billion on buybacks because they are trying to save the stock and they are also selling stocks, some here, some there, mostly selling stocks. And I hope it works for PayPal. I think It's impossible to know. Therefore, it is a bet. If there would be cash flow so that I know I'm getting a 6 billion dividend for the next 5 years, then I can play around with that, and then I can, let's say, create a cash flow margin of safety model. As they are spending everything on buybacks, and I cannot see where this business will be in 3 years, maybe 3x, maybe 50% down, it just creates more leverage, and it increases the downside, but somehow also increases the upside. So it's more of a bet. Who makes money? The management. As they are selling the stock, they take the money. If it works, they will be even richer. If it doesn't work, they'll have their millions. That's the name of the game with PayPal. So the crypto, the growing everywhere, the buybacks, it's again a sign of protecting what's still hanging there, but the outlook for me, it's still too risky, but I hope it works for your 3x, you that have a large position in PayPal.